welcome to the Blue Line Metals Edge here for Wednesday, January 18th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching us on YouTube, be sure to like and subscribe. If you need additional information, go to bluelinefutures.com, highlight over that research, sign up for a free 2-week trial. You'll get the Morning Express, which is one of my favorite reports here. It's also our flagship report. Covers a lot of the fundamentals across those macro markets you guys love. So getting into the gold and silver section here today, you can see that gold spiked on its slower PPI news, but failed to take out Sunday's holiday session high, 1931.80. That's your key level of resistance. We do have that as a 3-star major resistance level. Also for silver, it is one as well at the 24.53 to 24.78 level. It's a little bit wider because there's some volatility with silver. A lot of players coming into those markets. Again, if you don't get the Morning Express, be sure to sign up for a free 2-week trial. Looking at the tactical insights, it is staying here long on gold, silver, copper, platinum, but you can see with that move in platinum, that risk range had really widened out quite a bit. That downside probable range, we saw the upside blowout and the downside blow up. So it's got some heightened volatility here today. Now getting into all the positions with regards to it, you go to gold, it is still long. It's trailing that stop, 1861.50. It did get long at 1727.80. It has a nice open profit on here. If you have this, consider booking some of those profits or use some of these key levels for the risk management, like 1890.40. Looking at silver, same thing. Nice run up on silver. Got long at 2090. Settlement was 2406. Right now we're pulling back though, 2462. So that's where you're going to want to use this stop loss. 2354 would be your suggested trailing stop loss on the market. Now looking at the data here today, you had a couple big things come out. He had that Bank of Japan, that press conference. What they did was they really threw kind of a dovish spin on the market. They're also trying to implement some kind of yield curve control in the market. So that's why you saw a lot of risk on last night. And coming into today, you also saw that tailwind on the risk on with core PPI coming out in line with expectation. Retail sales taking a big dive. And you got that PPI really coming off here. So those costs, those producer costs had come down quite a bit. And really, I don't think it's that great of a sign. I don't think that it is going to be what stops the Federal Reserve from raising rates. The Fed is on a warpath right now, and they are not going to stop until we really see that profit cycle come down. So I think it's going to be a couple months here before we get that Fed really kind of scaling back and we get that Fed pivot. Then we get that natural rally. So I think a lot of these markets are going to continue to sell off here into that type of data and that type of announcement. So looking at crude oil here today, all these charts are going to be the same. We came in risk on from PPI, and then since then, it's been kind of this steady sell-off here. Same thing with the gold market. We come in, we get that rally going, we get the extension upwards. As that day was progressing, we began to sell off. Silver, same deal, kind of hanging out to the upside and then falling out of bed. Platinum, look at this big reversal here. So you get this rally going on most of the day. You peak right around 1080. I know a lot of you guys got out at those levels. That was the upside probable range on the day. Since then, big sell-off. We'll probably be getting back into that market. And here's kind of the head scratcher is that there is this really hawkish tone coming out by a lot of the Fed speakers. You know, I think Jerome Powell's going to cement that. They don't have this inflation behind us. You could see inflation hang out, go sideways for quite a while. And with that being said, I think that the 10-year note right here, you've got yields down on the 10-year right around 3.4%. I think that is going to be a bottom. And I think that that market's going to start to turn back up to the upside, taking these 10-year notes back down with it. So if you do have 10-year notes on, be a little bit more patient. I think we're going to come off from here. If you have any questions, futures option trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.